Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about the impact of economic reports, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy, guys.
Let's pretend that this is all blank here, and then this represents a day. And so what I'm going to do is I'm just going to annotate this. And let's say that right here is 7 a.m. Here is where economic reports typically released at 8:30. Here's the market open, or 9:30. Here's the end of the morning session. Let's call it 12:30. Here's the end of the afternoon session. And then here's the close. So this is going to be a plot of volatility. So volatility is always relative to where it was, right? It may not look like there's volatility crush or anything if you look at it from a holistic point of view. But generally, what you're seeing is a rise into market reports like this, and then a drop like this. And then when the market opens, you'll see a rise like this, and then it will be doing something like this. And then as it gets just past the afternoon session, it'll start dropping again like this. And then when it gets to the last hour, it'll do something like this. This is a very generalized view of volatility, sort of the average. So what we're trying to do is we're trying to take advantage of this event and this event. The close is actually usually right around here. You don't really see, this can be anything. This can be going way up like this. It could be going down. But once you get beyond this point, the decay of premium, will have its greatest impact here and here, these two areas that can be affected by volatility, that are volatility-induced decay, VD. Once you get beyond this point, volatility starts losing its effect, and time becomes the final arbiter to the decay rate of premium. So these are the two events that we're trying to affect. Now, this one on economic reports is variable. It doesn't always happen. Each report has different weighting in terms of its effect on implied volatility in that morning. Where this level starts in the morning will be dependent upon what kind of reports are coming out and the general state of the economy, the short-term economy. So that'll be variable, but often there are impactful reports, and this is where that big ass fly. If this here, we started down here today. Sometimes you start way up here, right? This might be a debit of 25 on a big ass fly. This might be a 5, and then this might be a 35 debit where volatility is starting, right? As we go into higher starts in terms of volatility in anticipation of these events, the debit gets smaller and smaller on that big ass fly. In other words, implied volatility is rising in anticipation for whatever this event is. And when it happens, it will drop fast, and the value of our fly will increase rapidly. And then when we get into the normal market, you got to remember that premium is always decaying, but it's decaying at different rates as it's going this way. We start getting into this session, and we try to get in because volatility has risen, and this gives us the best risk to reward opportunity. In other words, to get the best pricing for our flies. We adjust the width based on the big picture volatility in order to compensate for the total level of volatility and whatever this decay rate is up here. And then once we're in there, we're hoping that price is going to move towards our fly, and we get into this area here. Now, it's always decaying and it's always slowly going up, but its rate of ascent is going to be different each day. So when we get in, it looks like this, and then a little later in the day, it looks like this, and then maybe some event makes it pop way up like this, and then it just hangs out for a little while, and then accelerates again. So it's going through different rates where this premium is filling up the fly, and that's really based on this general sort of average change in volatility during the day. Here and here are the biggest opportunities, or where we'll experience the most rapid growth. Getting over here in this deep into the market, once you're beyond the morning session, the probability of you getting there and being still in that trade has dropped dramatically. I don't know exactly what the numbers are, but I would say that 50% of the time that you take out of the money flies that are in profit, you don't get into this area. So in other words, 25% of the time, you never get into this time frame.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.